Most service members make a huge mistake with their life insurance, but they don't even realize it until it's too late. If you are in the part of your career where you are nearing retirement eligibility, that's great, but I really want to share this information with you because I am finding that most service members are just checking a box without knowing what they're clicking with regards to their life insurance. In particular, I'm talking about the Survivor Benefit Plan and VGLI or Veterans Group Life Insurance. If you don't know what you're doing, you can easily be wasting you and your family hundreds of thousands of dollars over the rest of your life after leaving the military. But today, I'm going to go over the differences, pros and cons, and how they actually work so that you can make the most informed decision for yourself when it is time to make the big transition from military to civilian life. I'm Michelle Masher-Batista with Deliberate Military Experience, and let's dive in. We have a lot to cover. The big three areas that we need to discuss today are Survivor Benefit Plan, or SBP, the Veterans Group Life Insurance, or VGLI, sort of like SGLI that you're used to, and private life insurance. Perhaps this is something you've never really even considered before, but I'm excited to talk to you about it today. Let's dive into Survivor Benefit Plan first. Let's get something straight first. Survivor Benefit Plan, or SBP, is not life insurance. It is income protection. And basically, you pay a premium each month right after you retire so that if you do die before your spouse does, they will continue to get a portion of your military retirement pay. Now that might sound like life insurance because it has to deal with continuity of somebody's life, but really it is just a way for your military annuity to continue to your spouse. Now, it can sound, of course, you want to do this, but when you break down the numbers and your health risk factors versus your spouse's health risk factors, it can get a little confusing very easily. So let's kind of get into some details. Off the bat, some pros to the Survivor Benefit Plan is that it will cover the rest of your life for your spouse. Again, your spouse will get this benefit should you die before them. So they will continue to get a monthly payment from the military for as long as they live. So that's great. Another benefit is that it's COLA adjusted, kind of like each year when you might see a COLA adjustment on your military salary. So that's the same for the SBP annuity for your spouse. If COLA goes up 2% each year, great, they get that adjustment too. Another great thing about SBP is that it doesn't require a health exam. It's just something you sign up for when you go to retire from the military. No questions asked. It's just something that you can count on, which is really great for your spouse. Now let's go over some cons to the Survivor Benefit Plan because this is where things start to get a little dicey. SBP isn't free. You might think it should be because you worked for the military and you're married to your spouse, but that is not how it works. To participate in SBP, a decision which you must make at the point of your retirement, and one that cannot be changed, is that it will cost you about 6.5% each month for 30 years or 360 payments. You have to pay that much into the program to continue for your spouse to get the benefit should something happen to you. And that can really add up quickly. Another con to the SBP is that there's really no flexibility about who can get benefits and whatnot. It is intended primarily for your surviving spouse. There are caveats regarding your children, but generally speaking, it's intended for your spouse should you die, and they can continue to collect your annuity. But not the entire annuity. They only will get 55% of your military pay. And we'll go over some exact examples to what that looks like in a few moments. Another con is that should you die and your military spouse get the benefit, if they remarry before the age of 55, they no longer are eligible to receive their annuity from the SBP. which can be a downer depending again on your age and the age of your spouse. If you unfortunately die at a younger age and your spouse is still on the younger side, that could prohibit them from making some other life decisions along the way. Another con is that there is no option for an upfront lump sum cost, unlike actual life insurance, which we'll talk about. The annuity that your spouse gets is still taxed per normal, so there's really no tax benefits upfront with that. And if your spouse dies after starting to collect, that's it. There's no pushing that money forward to your children or anyone else. There's no generational wealth transfer. Again, the main point of the survivor benefit plan is to ensure your spouse gets about 55% of whatever you were receiving for your military retirement pay as a means of protecting income. It is not complete replacement of your military pay, and it is certainly not life insurance. It doesn't have those same rules and stipulations and whatnot. So again, SBP will cost you about 6.5% per month of your military retirement pay, and it is automatically deducted. You can take it off the top before you pay your taxes, because if you didn't know, your military pay is taxed. So your premiums that you pay each month are taken off the top. So it will maybe adjust your taxes only slightly. But should you die and your spouse get your benefits, they will be taxed on the back end. Let's get into some examples to kind of break it down a little bit more clearer. So in this example here, we are assuming your monthly take-home pay is $2,000. Let's just go with that number for the sake of an example. Your SBP premium at 6.5% will cost you $130 each month. That will be automatically taken out. So per year, $130 times 12 is $1,560 per year. And you will have to pay that as long as you are alive, or up to maxing out at 30 years or 360 months, which will cost you, if you live to pay it in full, which I'm assuming you will cost you $46,800 at this example. So that would mean that your surviving spouse would be expected to receive 55% of that $2,000, or 0.55. That translates into dollars of $1,100 per month. But again, that would slightly increase each time there's a COLA adjustment, which happens usually every year, if not every other year slightly. So that is not nothing for sure, but it is not $1 million lump sum, which one might expect in a life insurance policy. If something happens to you when you're younger, this can really add up. In this exact example, in just 4 years worth of payments to your spouse at the 55% of the $2,000, that can equal $52,800. So you will have more than broke even the amount of money that you would have had to pay otherwise. So this is a very solid program worth considering. However, with the amount of money that you pay into it, 6.5%, there are other options to consider. SBP isn't really a matter of figuring out if it's expensive or not. The real question is, how long does your spouse live after you? Figuring out if it's worth it in the long run. This is more of a longevity insurance, not a life insurance. For more information specifically on the survivor benefit plan, I will list the military pay and DFAS websites for more information. If you're finding this information helpful at all, feel free to hit like and subscribe. I would really appreciate it. That lets me know you like this content. Moving on to the next hot topic is the VGLI, or Veterans Group Life Insurance. This is a spin-off of SGLI, which you are probably accustomed to paying $25 a month for a $500 life insurance policy. Well, this is its cousin, and it is an opportunity for you once you are retirement eligible. You can make the decision to basically carry over the same similar policy from SGLI to VGLI. Now, I will be upfront, this is my least favorite option for you. However, it does have its place depending on your personal health status. So let's get into it. The good news is that you can just roll into the VGLI once you retire. And if you do it quickly, there is a time limit, but if you do it quickly, you don't need a health exam. If you are somebody who has smoked or done any sort of tobacco or have liver issues from drinking too much on TDYs over the course of your military career, this may be the way to go because no health exam is required. However, I would still shop around and see what you can get from other organizations, but we'll talk more about that later. VGLI can be really great while you're trying to figure out if you want private life insurance options. It can be a really solid gap coverage, but I will say one of the biggest negatives about VGLI is that the premiums increase every 5 years. In fact, they almost more than double to keep the same coverage of, you can get up to $500,000. Really look at the math to see if it works, and I'm willing to bet it won't make sense to you. There's no cash value in the VGLI, very little flexibility. It is not a very good long-term strategy, but let's look at the numbers to show you a little more. If you're retiring from the military, you're probably in your 40s or thereabouts, and you can see the monthly premium just to roll into a $500,000 plan would be about $75 a month, about $900 a year. And so for that 5-year period before premiums would increase, it's about $4,500. Okay, that might be within reason, but as you can see, almost goes up by 50% in just the next set of 5 years. And just every year, it just kind of goes up. And so you just really need to see that by the time you're in your 50s and 60s, the time when your income may be going down is when the premiums start to really crawl up. Over a course of 25 years from 40 to 65, you will have paid under the current prices about $80,000 for a $500,000 plan. And that plan will not have increased, unlike the SBP, where there is a COLA increase. That is just something to consider. It starts cheap, or I should say cheaper, but it explodes when you're getting older and perhaps could use those monies elsewhere. With VGLI, it's like you're renting insurance, and the landlord can certainly raise, and they will, raise their prices every 5 years. Now let's switch gears here to an area that I find almost no one really considers. It is just private life insurance, specifically term life insurance. And I think that most service members don't consider private life insurance because they might think it's automatically more expensive because it has the word private in there, or they're just not exposed to it. It's just easy just to click the survivor benefit plan box, and it's just easy to click the VGLI box. It's presented to them and they just pick it. It's the easy one, but I really think this is a missed opportunity. I know this because I feel like I have this conversation with people weekly. But basically, private life insurance, let's break it down real quick. There's 2 types, term and whole. I definitely would recommend term, and basically what term is that under the model, you pay a premium for a set amount of time. Let's say 20 to 30 years. It is cheaper than whole, but there is an end date with it. For whole life insurance, it is, as it says, it is for your whole life that you will pay a certain premium with adjustments. It's more expensive, but it does kind of build some cash value. But for my research, for most people, it's not necessary. Personally, my philosophy is that I wanted life insurance, private life insurance, that could cover myself and my family to a certain point where they are comfortable and in a good position to withdraw from retirement funds when I would be around the age of 60. so that the whole life insurance was not necessary. I just needed family protection to get my family through the college years, maybe pay off the house and some other things, and that was good enough. So with term life insurance, it's cheaper for, I think, a bigger bang for the buck. Moving forward, we're just going to focus on the term life insurance portion. Let's talk about some of the pros of it. One, it is quite flexible. You can change who the beneficiaries are along the way. You're not set in stone with it as you would be with the survivor benefit plan. Another pro, which I really like, is that you aren't capped at $500,000. I personally have over $1 million life insurance policy for much less than any of the programs we just talked about. So it's nice to have those options if you say you have a bigger family or you have more expenses that would need to be covered. Side note, if you don't know what your monthly expenses are currently or what it would take for your family to maintain their current way of living, just go do that and come back to this video. You need to know what your family's operating expenses are so that they wouldn't have to change the way they live should something happen to you. Another pro of the term life insurance policy is that it can really build generational wealth. Should something happen to you while you have a life insurance policy, you can elect for your family or your spouse in particular to get a lump sum payment of it under most circumstances, tax-free. That is not the case with survivor benefit plan. Whatever income replacement your spouse would get, they have to pay taxes on it for every month that they have it. With life insurance, they just get the money. They can remarry, they can invest it, they can pass it down to your children immediately into their own policy if something happens to them. This is a real great way to ensure that your spouse is protected and that there's mechanisms in place for them to get those monies and pass it down to your children or other dependents almost immediately. So it is just a really great way to protect people in the greater scheme of things for a longer term of time. Now, perhaps the only con that I can justify or see where people would be hesitant is that they would require a medical exam. And I understand that if you are a habitual smoker or have other health-related issues that you would have to claim, yes, the premiums would certainly go up. I can say that as a non-smoker, very rarely drinking kind of person, your premiums are under $50 a month, which is really great because that's the same price. That's not going to change once you're locked into a policy. The exam consists of, I think it was peeing in a cup, getting your height and weight taken, and answering a questionnaire. It really was not that complicated. You do have to answer a medical questionnaire and basically attest to everything you're saying is true. Certainly that's different for every policy institution, so look into it. Many institutions offer this. USAA, Northwestern, all sorts of just regular banks offer life insurance. MetLife is another one. I did the research for myself. I looked into maybe 3 or 4 policies. They were similar. I kind of just picked the best one with an organization I was already comfortable with, and it was a great decision, and I just sleep better at night having that. And I'm not even at the military retirement stage of my life. I got it well before because I understood that it's cheaper to get life insurance when you're younger than older. So just another consideration. If you're watching this video and you are, 1, 2, 3, 4, 5 years from military retirement, there's no need to wait to get private life insurance. I really would encourage you to get it, especially if you have family, and you can certainly have private life insurance while also having the SGLI while serving. Let's go over an example for a 40-year-old who's healthy, non-smoker, and is looking for a 20-year term life insurance policy for about a $500,000 payout. The monthly premium, market average, depending on your situation, could be $40 to $60 a month. As I mentioned earlier, mine is, quite frankly, is $47 a month. You pay it every month, and you can see what it can equal up to. Averaging over 20 years, it could be, about $10,000 to $15,000. And this is for a $500,000 payout example. Premiums don't increase, unlike the VGLI, which, as you saw earlier, increases every 5 years and might I add go up quite a lot. When comparing the private life insurance to VGLI, it's obvious. The real benefit I only see to the VGLI is that it's solid gap coverage between retirement and searching for the appropriate private term life insurance policy, or if you do have considerable health conditions that are that would prohibit you from getting a solid premium amount for a term life insurance policy from the private sector. And that's really about it. I wouldn't even consider it VGLI personally, but that's for you to decide. If you're young and healthy, you could often get $1 million of coverage for way less than you would be paying for the long-term amount that you would pay into the SBP or VGLI. But that's just my opinion and for you to look into. Before we continue, I just want to take a little side note that if you are in the Reserves or National Guard, you are eligible for the Reserve component survivor benefit plan. I'll make a whole nother video about that because it gets even more complicated. I will just say that you will need to make decisions years before you possibly even actually retire from the military. You need to figure out and commit early before that time when you get your 20-year letter of eligibility to retire. So again, I'll make a different video for that, but just know if you are watching this and you are a reservist or National Guard person, you have other considerations and very important timelines to consider. That's not to preclude you from understanding VGLI or the private life insurance option. Now, let's compare survivor benefit plan, VGLI versus life insurance one more time so you can see the big picture. Just a reminder that SBP is income protection, not true life insurance. There is no lump sum tax-free option. It is just a continuation of your military benefits to your spouse, about 55% paid out to them should something happen. VGLI is just a government life insurance type, cousin to the SGLI, and private term life insurance is through, as it insinuates, private organizations like USAA, Northwestern, Navy Federal, those sorts of organizations all have life insurance options. SBP varies depending on how much money you would make. That $130 is based on the earlier example where your benefit is $2,000 a month. If you are lucky enough to have a higher military retirement payout, well, that 6.5% would be naturally more. But for the sake of this example from earlier, it would be $130 versus $75 approximately versus about $50. So as you can see, monthly SBP would cost more out the gate, but soon VGLI would trump its monthly costs within 10 years. The payout totally varies depending on how much money your military retirement pay would be. That would make it higher if you have to pay out more. And of course, VGLI goes up each year, every 5 years rather, and private term life insurance is very stable. That amount would not change once you're locked into a policy. The payout, SBP is a monthly income. VGLI and term life insurance would go to your spouse or beneficiary in a lump sum capacity. Only SBP is protected from inflation by adjusting for COLA each year, and it has very low flexibility and but no medical exam required, unlike private life insurance, but it has the most flexibility. So in the end, SBP is totally a great program if you feel that your spouse will outlive you, especially longer, if they're healthier than you and younger than you. VGLI, again, has its place if you are going to be shopping around for private life insurance within the first 5 years of separating from the military. and you just need a short bridge, or if you have significant health issues that would preclude you from getting a good rate on a private life insurance. But again, the private life insurance option gives you kind of the most options. You can shop around and get a policy far greater than $500,000. The survivor benefit plan is a great mechanism to guaranteed income for a surviving spouse. VGLI, sorta. Private life insurance, yes, you would guarantee that generational wealth transfer. But I will say, this is only a part of your financial picture in consideration for your family. If you have other mechanisms, financial tools, really think about it. For example, how much do you have in your TSP, your Roth, those sorts of accounts? Or do you have other investments or other assets to consider? If your family is set pretty much with or without your military retirement, if your family has other business ventures, it might not be worth it to sign up for the SBP program, because it is quite expensive at 6.5% of your military retirement pay, and you can't change it. You can't cancel it. They will automatically take the money from you. There's no going back. And to not have that flexibility might not be the best option for you. I would really consider it before you just hit click yes, automatic. Really understand the pros and cons for you and your family. VGLI, I've said my piece about it, but the private life insurance, I really encourage you to shop around, especially if you're under 40. That's the great time to get life insurance, a good 20 or 30-year term policy. Really look around, get the medical exam, see what it's about. If you don't like it, don't get it. What the institution's offering you for your monthly premiums, because again, once you're locked into a rate when you're young and healthy, the better in the long run to protect you and your family. If you are a reservist or National Guard, be on the lookout for the video where I talk about the reserve component survivor benefit plan, because that is even more complicated. If you found this video helpful in any way, hit like and subscribe, and I'll see you later. Thanks.